primary purpose of IRS Form 8453 is basically if you're physically mailing in IRS Form 8283 because of a donation of over $500 or more in property. So, just as you mail in your 8283, you want to attach IRS Form 8453. It's a real easy form, one page. You just simply check the box that says 8283 and you attach 8283 to it, but make sure you put your personal information in there. Your personal social security number, name, and address goes on there, and you mail that off to the IRS. So that form, we're going to include it to our clients so that they could get a better understanding of it inside of this dissertation. And for your convenience, we're going to also include IRS Form 8282 in the rare cases where the nonprofit that receives a donated vehicle or property wants to resell it. We're now going to go deeper into Module 3 on documenting donated property, required documents from donors, and the importance of appraisals for certain values. You should be conscious and aware of Form 1040 Schedule A, itemized deductions. You could take the standard deduction if that deduction is more than the money that you donated for the year. However, if you made a huge donation, like say you donated a car or a house or something of that nature there, the donor may want to itemize that deduction on Schedule A, itemized deductions. Basically, line number 16 is for contributions other than by cash or a check, for example. All right. If you make a car donation or real estate donation, you want to include IRS Form 8283. All right. So cash contributions of money, if it's over $250 or more required, a detailed receipt from the charitable organization, you get the written acknowledgement. Those of you that are clients, you received in the mail a sample package in the name of yourself, the name of your board, your nonprofit with your number and address and contact information on it. And that form, you can actually fill it out and give it to any of your donors. Like if they donated some food from your local supermarket, or they donated some toys for the holidays or turkeys for Thanksgiving, or they donated some boots and coats and clothing for low-income family or homeless people. If they donated electronic equipment like laptops and TVs for your community center or your church or your masjid, if they donated paint and equipment to repair your property, any type of donations that is over $500, you may want to itemize that deduction, but you want to look at your overall tax situation, because the standard deduction every year is usually more than what most people give in their contributions, so they ain't really got worried about it. They just go ahead and take the standard deduction, depending on the year. However, those of you that have a giving spirit, some people, they do charity, they do sadaqah, they do zakat, they tithe, so at the end of the year, that donation might be $30,000, $50,000, $100,000, millions of dollars. So they want to do it correctly and properly, and they want to itemize those deductions so that they can get the full tax write-off. A common mistake that donors make, once you give them a written acknowledgement from your nonprofit, say a cash contribution of $250 or more, you give them a detailed receipt, whatever the case may be. Your IRS gives the nonprofit the authority to give written acknowledgement to any of its donors. They don't have to give the IRS a copy of the written acknowledgement. They supposed to keep that for their records. They should hold it for 3 years. The IRS already has your EIN number on file, and you file your 990 or 990 EZ or 990 postcard every 12 months. So the IRS is not looking for a bunch of paperwork, so they make it really easy, So some taxpayers that get these detailed receipts, they send it in and they don't have to. And keep in mind the $250 is for if you have one cash donation that's $250 or more. Meaning if you got a bunch of $5 and $10 and $20 donations, you don't need all that paperwork. I mean, less is more. It's very important that you document donated property, whether you're a donor or part of the nonprofit organization. Having the right information can help you maximize the impact of each donation while staying compliant with the IRS guidelines. All right, so first, let's talk about the required documentation. Remember, whenever property is donated, it's important to keep thorough records. For donations valued over $250 in cash, a written acknowledgement from the nonprofit is a legal requirement. This should include the nonprofit's name, the name of somebody from the board. It could be the CEO or chief executive officer. It could be the minister, the imam, the reverend, the sheikh, the guru, the author, the president, the founder, whatever title. It can also be the chief financial officer. It could be the treasurer. It could be the executive secretary or the secretary or someone on the secretariat staff. So any position would suffice as long as it's a recognized and legal position that's outlined in the nonprofit bylaws. Any of you that are clients, you know that part of your package, you get your nonprofit bylaws with your package. So who you have on the board, depending on your state, your nonprofit, the size of it, it could be one person, it could be 3 people, it could be 10 people, So all that depends on you, but you want to make sure that that written acknowledgement contains someone's that has the authority to sign that document, and that person is registered with the state, filing on the state charter saying this person has the responsibility to make sure that the IRS paperwork is right and exact. All right, so the IRS just want to make sure that even though no individual or individuals can own a nonprofit in the United States of America, a nonprofit is considered a person. And a nonprofit, being a person, has certain rights and privileges like human beings do. So, you don't want to confuse your personal self with the nonprofit. Many people look at it like, oh, I'm the founder, I'm the president, I'm the CEO, I'm the boss. I mean, it's my business. No, it's not. That EIN number and that nonprofit is its own business, okay? Your job as a member of that board is basically day-to-day operations. And the benefits of that nonprofit is being given as a tax incentive because they making the nonprofit in such a way that the person who donates a car to the nonprofit can get that money from Kelly's Blue Book value from the IRS as a fair market value, or FMV. That's not your personal taxes. That's not your personal money. That money should be inside of a business account, a nonprofit business account to be exact. A 501c3 non-stock nonprofit doesn't mean that you, as a owner, founder, whatever you want to call yourself, can't pay yourself or pay your employees or board members. You have the legal right to use cash and credit cards and checks to operate that nonprofit, to try to grow that nonprofit, to improve on that nonprofit, to expand that nonprofit. If you need a laptop for your nonprofit, you don't spend your money, you spend the nonprofit's money to buy that laptop because you're going to be using that laptop for business purposes. If you need a podcast mic, if you need a car, if you need an office, if you need a house, if you need a community center, a church, a masjid or mosque, a temple, a synagogue, a school, whatever it is that you're trying to do, there are rules and codes how you operate it. But as long as you keep everything under the umbrella of your nonprofit, the IRS is not going to have no problems with that. So that's important for you to keep in mind. All right. Now, for donations valued over the $5,000, the IRS requires an appraisal to verify the value of the property. This applies to items like houses, commercial buildings, skyscrapers, farmlands, parks, whatever someone can donate to you. It could be artwork, it could be a rap song, it could be someone's mixtape, but you can't have Joe Blow make a rap song. He'd say, I'm just using this hypothetically, say somebody made a rap album, a CD, and it is 16 songs, and they donated their rap album to your nonprofit. And you say, okay, I'm gonna give you a written acknowledgement. This rap album is worth say $200. They may say, my rap album is worth $2 million. I mean, and it's like, so the IRS would be like, okay, let's get this straight. You taking an unsigned artist that's independent saying that his or her album is worth, the fair market value of that album is worth $2 million. Their thing is fine. Fill out IRS form 8283. Don't tell us on 8283, show us who certified that this album went double platinum. Because other albums that go platinum get certified. We want to know what professional stepped in and looked at this independent album and said it's worth $2 million. And attach that information here. So now that thing is like, all right, maybe the artist is independent and unknown and really is worth $2 million. Now it could be worth $20 million. And the IRS would give them the $2 million or the $20 million as long as that genre is certified. Meaning they'd be like, okay, well, they sell streams for $1, and here's his digital count showing that last year his one song got over 800,000 streams. His other song got over 400,000. The other one got over 70,000. So they'd be like, okay, it's plausible that this album is worth $2 million, and they'll send them a check from the U.S. Treasury Department with a picture of the Statue of Liberty on there as a hologram, and it'll say $2 million payable to that particular person, and the nonprofit gets that particular album and can use it for nonprofit purposes, or they can fill out IRS Form 8282 and sell that $2 million asset to a music museum, sell it to another artist, and they may take a loss on it and say, okay, it was donated to us. The value is $2 million. We sold it for $1,200,000. Now I mean 1.2 million. Now I mean, and we took the $1.2 million in cash and put it in our bank account, our nonprofit bank account. They're fine. Know what I mean? So as long as you're using IRS Form 8283 correctly, the IRS is not going to have no problem no matter how you doing it. If it's Bitcoin, if it's real estate, if your homie got 9 cars on a little car lot, he could donate one of the cars. He give you a truck. Now, I mean, and that thing is, we don't want your homie donating a truck to you, and you're saying, oh, the truck is worth 40,000 and the truck is only worth 18,000. That thing is, we'll give him 40,000. But on IRS Form 8283, we want you to show and prove. Don't show and tell us how much it's worth. Show and prove to us by Kelly's Blue Book or some vehicle blue book that this car, this truck, this yacht, this speedboat, this canoe, this camping equipment, whatever it is worth what you're saying on the written acknowledgement. Your written acknowledgement should reflect the FMV or fair market value of that particular property as fairly as you can. My thing is, you shouldn't be too high, you shouldn't be too low. Use the Goldilocks formula. You should be right in the middle. Now, I mean, if Kelly's Blue Book say this truck, this make, this model, this year of the truck, the condition of it is good condition, but it got a lot of miles on it. When it was brand new, it was worth this. And this truck, as of today, is worth between no less than $40,000 and no more than $60,000. My thing is, you get the truck donated, you get them a written acknowledgement for exactly $50,000. You don't go too low, $40,000. It's worth no less than $40,000. It's worth no more than $60,000. You go right in the middle, $50,000. And when you do a car donation, you ain't gonna hear nothing from the IRS because you're doing it right, and the person gonna get that money. You do a truck donation, a used jet donation, a used airplane, private airplane donation, a boat, a yacht, whatever, a helicopter, a motorcycle, no problem. Just use a professional standard anytime you do the appraisal. Don't let your homie do the appraisal. You don't look at a house and say, oh, this old house, I could fix this joint up. It's going to really be worth. It's not what it's going to be worth. If they donate it to you, what is it worth right now? 60 days within that donation. That appraisal is only good for 60 days, 2 months, family. Not 61 days. It's only good for 60 days. It's no good if you didn't get it appraised. If you didn't get it appraised professionally, they're not getting a check. They're not going to get no money. They could donate it to you, but they ain't going to get no money. You see? So you want to make sure you have a professional appraiser come out and do a proper appraisal of that property. It could be an old raggedy house. It could be a mansion. It could be a couple of acres of farmland. It could be millions of acres of land. I mean, land, real estate, skyscrapers, string districts, business houses, what have you. Twin homes, townhouses. The IRS don't care what type of real estate it is. They really care that a professional appraiser is the one who signed IRS Form 8283 and put his or her signature on there, and their company's EIN number and the name of that company and address to that company and the date that they did that appraisal. And you got a copy, the donor got a copy of the appraisal. So y'all good to go. Y'all got all the proof y'all need, know what I mean, when it comes to that kind of stuff. But a lot of people think they could just watch a video on YouTube and just fill out documentation, and they don't know what they doing. And it don't work. And the money don't, or they get a lien on that property. The IRS are like, yo, you owe us. Yo, we revoking your nonprofit status. You no longer have 501c3 status because you don't know what you're doing. You're doing it wrong. You know what I mean? So knowledge is power, family. Make sure you do it correctly. Make sure you do it legally. Understand that everything is computerized, so they're gonna see what you don't see. All right. So keeping those records important. Like I said, keep them records for at least 3 years. Make sure everything's transparent. And remember, IRS Form 8283 is for small nonprofits and big nonprofits. Don't think that just because you're not the Red Cross and you making billions of dollars that you don't have power and need in promoting common unity in the community. Nonprofits come in where everybody else fails. Now, I mean, everybody can't eat. Everybody don't have shelter. Everybody don't have health care. Everybody can't pay the electric bill. So grants and donations and volunteers is very important, family. Always has been. Now, I mean, you're always going to need people that need help. Some people get hurt. Some people have mental health issues. Some people have addiction issues. Some people suffer wars, and they're going to need not just a handout, they're going to need a hand up. So helping people to help themselves is an honorable thing. You should live your life in the struggle for peace, truth, freedom, justice, and equality. It gets greater later.